It seems like no matter which way we turn, we're getting hit with taxes. Federal, state, and local taxes can add up very quickly. Fortunately, there are plenty of ways to legally pay less taxes. You just have to know what tools we have at our disposal that will allow us to put money away before it gets taxed. And in this video, I'm going over 5 ways that will allow you to pay less taxes this year. Let's go. Hey, this is Carlos with Influential Finance, and on this channel, I make videos every single week about different personal finance topics. This week, I'm talking about lowering your taxes. So if you're new here and you want to see more videos just like this one, consider subscribing. The first way you can lower your tax bill at the end of the year is by contributing to your retirement account. If you work for an employer that offers a 401k, this is your best bet since 401ks have higher contribution limits. If you don't have access to an employer-sponsored 401k, or you have hit the limit and you have more money to save for retirement, you can also open your own IRA, which stands for Individual Retirement Account. If your employer matches your 401k contributions, even if it's only a little bit, take advantage of it. Not only are your contributions pre-tax, but you'll also receive more money for retirement and not pay taxes for it. With an employer-sponsored 401k, you can contribute up to $19,500 as of 2021. If you are over the age of 50, however, you can contribute an additional $6,500 in catch-up contributions for a total contribution limit of $26,000. Since 401k contributions are pre-tax, if you have a traditional 401k, you pay less taxes today since you're taxed on a lower amount of income. You'll see the tax savings every payday versus waiting until tax time. If you don't have an employer-sponsored 401k, or if you are looking to put away even more money, you can open your own IRA at any broker. Your contributions are tax-free if you have a traditional IRA. Most people can write off up to $6,000 in contributions every year to lower their tax liability. You claim your contributions when you file your taxes, so it lowers the amount you owe or entitles you to a refund if you overpaid. If you're over the age of 50, you may also contribute an additional $1,000 in catch-up contributions for a total IRA contribution limit of $7,000. Keep in mind that these limits are as of 2021 and they can change every year, so make sure you check the IRS website for the latest numbers. The second way you can lower your tax bill this year is by opening and contributing to a health savings account, or an HSA for short. Keep in mind that you can only open an HSA if you have a qualified high-deductible health insurance plan. Although many employers offer their own employer-sponsored HSAs, there are many options outside of what your employers may offer. If you set up your account with your employer, it will work just like your 401k. Your employer will withdraw the amount that you committed to your HSA pre-tax. This will reduce your taxable income and in the end save you money on your taxes. Also, like the 401k, some employers match a portion of your contributions, which are also tax-free. In 2021, you can contribute up to $3,600 to an HSA for a single person and $7,200 for a family. This number will increase by $50 and $100 respectively for 2022. Your contributions to a health savings account can grow tax-free, and if you use the funds for qualified medical expenses, you can withdraw the funds tax-free as well. This is the triple tax benefit that you get with an HSA. You get tax-free contributions, tax-free investment earnings, and tax-free withdrawals. At the time that I'm posting this video, it's actually open enrollment at a lot of your jobs. So if you're looking to open your own HSA, I'll leave some links to HSA providers in the description below. Another way you can lower your tax bill this year is to take advantage of business tax deductions. If you own a business or even a side hustle, you can take advantage of business tax deductions to pay fewer taxes. You may not realize this, but there are many expenses that you may be incurring that could be fully or partially deductible. This is why it's so crucial for you to make sure you are keeping a good record of your business expenses. Not only will you have an easier time completing your taxes, but you'll also make sure that you are not leaving any money on the table by not including all of your expenses. If you have a lot of business expenses and you're looking for a piece of software to help you stay on track, I highly recommend Wave. Wave is free accounting software that will organize your expenses and even lets you attach receipts. If you're looking for something more advanced though, you can always try something like QuickBooks. QuickBooks is pretty good, you're just gonna have to pay for it. So always remember, even if you'd run a small side hustle, your expenses may help you lower your tax liabilities. If you can prove you actively work the business and you work the business for a profit versus as a hobby, it may be eligible. However, always make sure that you speak with your tax accountant before you take a random business deduction. The fourth way to pay less taxes this year is to hold your investments longer. The longer you keep your investments, the less taxes you'll pay on the gains. The IRS's threshold is 1 year. Any investments that you buy and sell within the same 12-month period are subject to short-term capital gains tax rates, which are equal to your ordinary tax rates. In other words, you pay the same tax rate on your investment returns as you would on money earned from your job. If you keep the investments for over 1 year though, you pay long-term capital gains tax rates. Long-term capital gains tax rates start at 0% and go up to 20%, which is significantly lower than your ordinary tax rates or your short-term capital gains tax rates. The amount that you pay will depend on your adjusted gross income, or your AGI for short. The fifth way to pay less taxes this year is to work with a tax professional. Even if you think you know the tax code inside and out, it never hurts to work with a tax pro. What if you overlook a major deduction that could lower your tax bill significantly? Tax laws change every year and sometimes throughout the year. Tax professionals stay on top of the latest legislation and know how to get you the lowest tax bill possible. Trust me, I'm a CPA and I don't even do my own taxes, because even though I know how taxes work, I don't work with taxes and I also don't keep up with every little change in the tax code. So make sure you work with someone that can ensure that you are taking advantage of every deduction possible. Not only will you save time and energy by working with a tax pro, you'll be less likely to have errors on your taxes, which means time saved in the future. Don't forget that just because you didn't get audited this year doesn't mean that the IRS can't turn around in 3 years and say, hey, we want to audit your taxes. They very much can and very much have. So work with a tax pro and make sure you get your taxes done right. Now, some of you may have expected me to say that you could pay less taxes by donating to charity. If you want to know why donating to charity didn't make this list, make sure you click the video right up here and I'll see you there. Peace.